Hey VV Nation, welcome to our YouTube channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Today's video is going to be a lot more of a thought-provoking video to get you guys on the right side of what's going on in the market right now. Okay, if you're brand new to the channel, don't forget to hit the subscribe button, hit the bell icon so that you'll be alerted to when new videos like this come out. And if you like the content, by all means, please hit the like button. All right, let's get right into it. Big news today. The CPI number came out, the inflation number came out, and pre-market, prior to the 8:30 report, the market was like, all right, let's go see what's going to go on. I think the market was a little bullish, and as soon as the number came out, the market started to tank before the market opened up. So pre-market, we went from a bullish sentiment of, come on, we can do this, to holy smokes, inflation is not good still. It's still high, all right? And the number came in at 8.3. It was supposed to be looked at just possibly at 8.1. So it was definitely hotter than anticipated. Now, what does that mean for us? Well, that means that the Fed is going to continue to be hawkish. It's going to give them the wherewithal to continue to raising interest rates at a hawkish rate. That means another 75 basis point, probably on the 20th or 21st, whichever the date it is, when it does come out. And I still think that personally that is kind of baked in. And why is it baked in? Because I think the Fed already, let the world know that he's effectively going to do whatever he can to go after inflation because it's so high. In his words, it's unacceptable. All right. And if that's the case and his job is to rein that in, he's going to continue to be aggressive. If you listen out among the world, in the FOMC world, everybody's behind him for the most part of increasing or raising them at an aggressive rate. I've been saying for the longest time, before this is all said and done, he's probably going to do a 1 full basis point. And something that's going to probably put the market or the economy more so in turmoil. But remember, he also said in his own words that in his actions, he knows that it's going to cause pain in the economy. So he's already set that up for us. He's already set it up that he's going to be aggressive. And something, the pain, I still don't think has really hit us as much as it's going to hit us as of yet. Now, this is not about fear mongering. This is not about doom and gloom. These are not my words. These are the words of the Fed in regards to going after inflation, which was, remember, at one time, transitory. Well, we all now know that he had to walk that back, that it wasn't transitory, that it was real, and it was the product of a lot of money being infused into the economy. Whether you agree with the reasons or not through stimulus, doesn't matter. It is the product, part of the product of all of the money that was being infused into the economy. The other side of that is going to be inflation or rising prices. So how does that affect us? When we go to the store and we spend for goods and services, prices are going up tremendously. And, is the threshold of pain there? Not yet, but it's getting there. There's a lot of people that's like, man, I can't do this. Or they're taking away from other things, cutting the fat on other things to put to the things that they need, especially the food. So this is not anything that you guys should have been blindsided by as far as what's going on in the market. As a subscriber to the VectorVest system, you guys were already prepared. I'm going to talk about the most recent uptrend we had. I stated that it was most likely going to be short-lived, and I'll talk to you why that was as well. All right, so that's the number that came out for CPI. The news is still bad. That's going to weigh on the market as well. And the sentiment right now is fearful as the VIX, or the volatility on the S&P 500, continues to rise. So there's a lot of fear in the market. That's not good for the market. And that's all part of the state of the market that we're in right now. All right, let's go into the software and looking at a VectorVest market timing graph, because if you're brand new to the channel, yes, we do time the market. Now, when I say we time the market, we don't predict which way the market is going to go. we follow the trend of the market and we keep our subscribers on the right side of the trend. Here's the most recent uptrend that I said I believed was going to be short-lived because our major indicators for letting us know when the market is looking for a bottom never actually got to the levels that showed that we were at a significant bottom. I'm going to click on this date right here where we can call that the most recent bottom. That was on 9/6 of 2022. Now, when the MTI, our indicator, market timing indicator, gets to a value of 0.60 or below, the market is looking for a major bottom. When the buy to sell ratio gets to a level of 0.20 or below, the market is looking for a major bottom. As the market pulled back, these indicators got close, but close only counts in horseshoes and hand grenades.
Boy, that escalated quickly. I mean, that really got out of hand fast.
It jumped up a notch.
It did, didn't it?
We never really got to those levels to give us a significant look at a real bottom. And I said that this was going to be short-lived. And right now, and today, no one day doesn't make a trend. Down day today because of the CPI number that came out. Looking at the 3 and the 8 exponential moving averages, they still haven't crossed to the downside yet. So 4 days off of that potential bottom that wasn't, defined by our indicators, the CPI number comes out, we gap down, big red candle, and that's where we stand. All right, so with all of that being taken into consideration, remember I said that overall we keep our customers on the right side of the market. Let's go put this on a 1-year graph. What's the trend of the market? I can draw a line from November high all the way down. We broke through that level of the downtrend. Let me make this a little darker. We broke through that level of the downtrend, most recently coming off of a June bottom. Boom, ran, found a level of resistance, came down, found that level of support. We bounced back above that level again, most recently. Again, short-lived, a lot more shorter-lived than this uptrend, shorter-lived than this uptrend, shorter-lived than this uptrend. But now, if we fall back down below this trend line, stemming back from November, I think that we're definitely going to be in for a lot more downside in the market, with the news being the same, with the Fed being hawkish, with the CPI or the inflation number still high. All of these things being pushed together, I think that we still have some more downside. Currently, though, we are above that level of the downtrend from November. All right, so now, looking at the market timing graph, getting this information, what do you do now? Well, keeping in mind that we do what we can to help to get you guys prepared. I've done a video recently talking about some recession-proof stocks and ETFs. All right, I've done a video that talked about contra ETFs. These are all things that we've been doing in the meantime so that you guys can keep your head off of the swivel and stay focused on growing and maintaining and protecting your portfolios. From this, what are we going to start hearing over and over? We're going to hear the words recession thrown around. People already think that we are currently in a recession. A lot of people don't think that we are currently in a recession. You're going to hear words like soft landing. Can we still have a soft landing? Well, the soft landing, in order for that to happen, the Fed's going to keep on raising, but he's got to keep an equal balance so that he doesn't topple the economy. There's a difference in between having or causing some pain in the economy and toppling the economy. If he cannot topple the economy, we can still be in for a soft landing. Either way, I still think the market still has more downside. We'll have to see if we break down below this downtrend to put us back into the downtrend. And then we got to look at our indicators to let us know when the market is currently looking for a current bottom. So what do you do now? Well, that's a great question. In our searches, I'm going to talk about two things that you can look at. The big thing is to look at buying contra ETFs. All right. I did a video on that. I talked about non-leverage, 2-time leverage, 3-time leverage. I think that this is a good time to still be in those if the market still has some downside. A couple of ones that are moving up nicely today: LABD, triple leverage; Hibbs, another triple leverage; Webb's, another triple leverage, all up double digits today; and SOX S, the shorts on the semiconductors, also up double digits. So those are some that you need to keep on your radar. But remember, if they're triple leverage, be very, very careful with those. Another thing, why not look at what industries are moving right now? I'm going to tell you 2 major industries that are on the rise right now. Petroleum, a big industry that's on the rise. You'll see that pop up time and time again. And steel, another industry that's on the rise. So you can look at either contra ETFs, or you can look at rising or the fastest moving industries. And overall, folks, don't be scared. We want to keep you prepared, because here at VectorVest, we do the work, you reap the rewards. This is a time to consider what's going on in your portfolio. Don't get frustrated if you're not making money. Sit back, reassess what you're doing, and accommodate what the market is giving to you. Take advantage of the direction of the market, and don't try to outthink or outguess what the market is going to do. Why? Because it will humble you each and every time. Folks, this video is over. And until the next time, see ya.